right, welcome back to Bazaar Morning Call. Well, we have a lot of companies on our radar, but the first corporate interaction, it was a weak quarter for Stovekraft. The EBITDA margin was at a multi-quarter low. The employee expenses as well as other expenses have risen, while their short-term debt also doubled in FY23. Rajendra Gandhi, who's the MD at Stovekraft, joins us now to talk about that. Mr. Gandhi, thanks a lot for joining in. I wanted to start by asking about what went wrong this time, because your expenses have gone up significantly. Your EBITDA margin is at a multi-quarter low. Can you tell us for FY24, first on the operational front, do you see more pressure come through? And if yes, what would the target margin band be for the full year?
Yeah, we are witnessing low demand in the market compared to what the business was planned to. And so the revenue numbers for the quarter were not up to the expected plan. And hence, there is a decline in our margins. But related to that, we have grown in every segment of the product segment that we cater to. We have grown at about 19% on our pressure cooker segment. We have grown about 16% on our non-stick cookware segment, about 13.5% on the induction cooktop segment, and also the appliances have grown by 11%. So we have witnessed growth in each of these segments. Overall, the company grew by 13%. It was driven by a 3% increase in margin and 10% increase in volume.
Mr. Gandhi?
So we have no pressure on the growth side, but the planned growth did not actually while there was a very tepid demand in the market, all of our robust distribution network could not meet the number that we had planned to, and hence there was a cost increase. The cost was planned and designed for a larger revenue number for the quarter, and hence the decline in the margin.
Mr. Gandhi, can you help us with the exact volume number? What was the growth? You said that, the demand is very tepid. Going forward in, say, the first half of FY24, what are you expecting in terms of volume growth? Will it be single digit? Will there be any growth at all?
No, we continue to, we are very bullish on the growth of the company, both for each of these channels. Particularly in the last year, we grew on all offline channels and our export channel. We had a flat or absolute no growth on the e-commerce channels, but even the e-commerce growth has come back. So we at the company, we are experiencing good growth. But of course, I'd also want to share that the markets are not as strong as what would aspire it to be. The markets are weak, but we are able to grow.
All right, Mr. Gandhi, good morning. Nigel on this side. I recall the last time we chatted, you said that you're looking to take the margins to around 11%. Now, in the past quarter, other expenditure was higher as well as employee costs, maybe some one-times as well in there. And that's why the margins are only around 2%. But could you tell us, given that demand is weak, so operating leverage may not play out, for FY24, what kind of a revenue growth are you looking at on this base of around 1,300 crores? And what does it mean in terms of margins from here on? Give us a broad band.
So let me also share with you that we have grown on our gross margins versus our previous year. We have grown by almost a percentage on our gross margin. We have further taken actions to improve our gross margins. I understand, of course, there are new costs that we have built to strengthen our team, to both on the sales side and the manufacturing side. There is a pipeline of products that have been planned or being produced now within the factories of Stovekraft, and they will all start delivering. So there is a cost that has been built for a larger revenue, but we are very confident to get to that number. And when these numbers happen, these negative bottom line margins will cease to exist.
Mr. Gandhi,
we are working.
Yeah, Mr. Gandhi, sorry to come in out here, but as you mentioned, gross margins have improved, which is good, but you're building a new team, and that's why the EBITDA margins haven't really expanded as much as planned. But the vision is to get to that double-digit margins. So which quarter will you get to those double-digit margins? It's second half of this year, quarter 4. When does that happen? And give us a broad top-line growth. Given the demand is tepid, will it be single-digit? Will it be double-digit revenue growth? Two numbers I'm looking for.
we are confident of a double-digit growth.
Okay.
The CAGR growth for the company has been, for the last 5 years, has been at 19%. It is far higher than the industry peers. And we are confident to continue this growth even this year. Of course, the last year had a 13% growth versus what we would have aspired to be a little closer to the 20%. But the CAGR is 19%, and we believe we'll be there. And regarding the growth, now,
Margins.
the margin coming back to 11%. See, for us, the first quarter is a smaller quarter. The second quarter and the first quarter combined are more or less quarter. The first half is closer to that 50%. So we believe at the end of the first half, we'll be back at that 11%.
Mr. Gandhi, just talk to us a little bit about that, what you started with, which is the demand in the market is weak. What is that? Does that seem to be a bit of a... Because I think last time you were on, you'd spoken about that. We've had the management of TTK Prestige over the last many months. They've also said, I mean, at one point they said they're diverting some of their local production to exports because local market is not that strong. So this seems to be an overall industry issue. Just your sense.
I think the base was larger, and if the markets, I mean, if the demand was normal, our growth would have been much larger. So I can say that we have a robust distribution network in place. All our offline channels have grown tremendously last year. So if I give you some number, we grew by 17% on our general trade. We grew about 14% on our modern retail. We would have otherwise grown at higher of 20% even on trades. So the markets are soft. Definitely there is a softness in the demand, and also because of the base that we would compare with the COVID years. While COVID years were not good for the world at large, but the cooking business did take a upstick during the COVID years. The base is maybe what is affected.
So, Mr. Gandhi, quickly, if you can tell us, do you see more pressure on your debt? Your short-term debt has actually doubled this year. More pressure over there?
No, this is all. See, we had a planned capex based and anticipating the bottom line numbers, and the planned capex have been executed, and we have not generated enough money, and that's where you see a rise in debt. There is about 70 crores of capex that we did, and about 25 crores of advances that were paid for the capex for this, and we did not generate all that money that we spent, and so you see a rise in the debt. But we are conscious of this, and in the next 3 quarters, we are very confident that we'll bring it down at least to the level where we were.
Okay. All right, Mr. Gandhi, thanks a lot for joining in, and all the best. That's Stovekraft. They've actually seen a lot of pressure in earnings. Debt has gone up, and they're saying the demand is not that great either, in fact, on the weaker side.